Hey guys, how you doing? So, why has the stock market gone? I'm recording this December. What's today's date? I'm recording this in December 16th, 2023. So, the last week or so, the stock market has gone. That means way up. And why has it gone way up? Simple. It is the Federal Reserve in the U.S. They are saying that in 2024, so starting in January, whenever they affect their interest rates. They said they were going to start being dovish is the word I think it is. Basically, they're going to start lowering interest rates. And when interest rates are lower, that spurs investment, spurs spending. So everybody is jumping into the market anticipating a boom in the economy in 6 months from now. Who knows what will happen? But one thing you got to learn about the stock market is that it's very much affected by sentiment, meaning emotions, rather than anything else. So what does that tell you? From my experience in the stock market, I used to trade a lot back in the mid-2000s. And let me tell you, it's impossible to predict what will happen over the next 2-3 months. You may get it right once in a while. My advice, and I'm not your advisor, but my advice is to play the averages. So what does that mean? That means the average investor, day trader especially, they lose money. Like 90% of them lose money. So that's number one. Number two, if you buy index funds, and index funds is basically a basket of all kinds of stocks. You can buy an index of the S&P 500 or the NASDAQ, and there's so many index funds out there. If you buy index funds, you will outperform, you will do better. Your investments will do better than 90% of professional traders on Wall Street. So you just buying every month or every other month or every 3 months, you buy a little bit more of an index fund, you will outperform, you will do better than the stock picker who's doing all the analysis and so on. That's just the fact of the matter. Yes, some people get really lucky and they're able to do amazingly well, but generally speaking, for the average person, unless you figure you're in that top elite 10% and you got time to work full time to study the market and to play this, you're much better off just buying index funds, dollar cost averaging, and just ride the bumps, and you will do very, very well, historically speaking. Now, again, I'm not your financial advisor. I don't have a crystal ball. I don't know what's going to happen in the future. You never know. But generally speaking, history teaches us that's the way to go. So anyway, in conclusion, the stock market is shot way up because the Federal Reserve is dropping rates. And so that's what happens. And there you go. Interest rates is always a huge factor in determining the value of stocks. As interest rates drop, stock values shoot up. As interest rates go up, stock values go down. It has to do with some pretty, well, I won't get into it, but it basically has to do with how much it costs to borrow money, how much it costs to, so that affects the investment cost, right? So if you're borrowing money, I'll just use round numbers, at 5% versus borrowing money at 1% interest rate, when you're borrowing at 5%, it's 5 times more expensive to borrow that money. But if you're only paying 1% or less interest rate, you're hardly paying anything for the money, so you can invest a lot more. There's there's a much greater appetite for risk. People are much willing to borrow at 1%. They're much more willing to borrow at 1% rather than they are willing to borrow at 5% or 10%. I'm like that as well. So for example, just in a very simple micro expression of that or example of that, when I bought a new vehicle this year, a new car, and because the interest rates are so high, 6-7%, I wouldn't even think about leasing it or financing it. I just bought it cash, because why would I want to pay the car companies, the bank, 6% or 7%, whatever it happens to be? Forget it. Now, on the other hand, if you're leasing a car or you're renting a car and your interest rates are 1% or 2%, then maybe it makes sense to lease at that point. Anyway, or to finance it. All right, I hope this is useful. If you like this type of video, have any commentaries, please let me know below. This is my secondary channel, by the way, which I'm just jumping back into. My main channel is on tech. That has 250,000 subscribers. Here I'm sharing my experience in business and finance and health and so on. Cheers. you.